Snipers, you have to see what's happening to the Bitcoin price this Tuesday as the CPI numbers came out today, and they were higher than expected. The markets reacted to this by wiping out over $1.6 trillion in the US equity markets, the cryptocurrency market wiping out over $69 billion. What does this mean for Bitcoin and the overall markets with the CPI report coming higher than expected despite US oil reserves being put out? Let's talk about this, Snipers. Let's dive straight into the chart. So the DXY pushed up today above its previous weekly open, and it has a very bullish daily candle. What does this mean? The most important puzzle piece is the DXY right now, Snipers. And by the way, smash the like button for the YouTube algorithm if you support these four-dimensional updates. We were expecting some volatility as we talked about yesterday with the CPI report coming out. We have the #1 cryptocurrency technical analysis on the internet. So the DXY is the most important puzzle piece. It pushed above the previous weekly open. We have to monitor this week, because if the DXY continues to break into new yearly highs, the likelihood that the S&P 500 and Bitcoin can break into new yearly lows becomes higher and higher. Now, people are expecting a 75-point basis interest rate hike now because of the CPI report, potentially even a 100-point interest rate hike. And so when that news comes out around the end of September, that's also going to bring a lot of volatility to the market. So we have to monitor the most important support and resistance levels for Bitcoin and the equity markets right now, because it's more important than ever with the Ethereum merge in less than 24 hours. We have retail sales numbers coming out, the PPI report coming out. There's a lot happening this week and towards the end of this month. This month is going to be insane. Remember, September has historically been a bad month for equity markets and the cryptocurrency market. As a matter of fact, the worst month historically is September in the equity markets. And so what are we watching other than the DXY? But just keep in mind, the DXY has a bullish candle. And so I want you guys to realize it's only Tuesday. We have a lot more days left this week. This could translate into new yearly highs for the DXY. We have to monitor that. But the S&P 500 is now testing its previous weekly open. This is the most important support level. 39.29 for the E-mini futures contract for the S&P 500 is extremely significant. Now, the bulls are saying this. We had 6 green daily candles in a row. 1 red daily candle is no big deal. Even though we took the elevator down and we were taking the stair steps up, they're saying that, okay, it's no big deal. We had 6 green daily candles, and the PPI report's coming out soon. CPI report came out already. This is just technical analysis at its finest. The narratives are always going to be there. They're going to attach it to the technical analysis. But we know technical analysis is black and white. It's like programmed into the charts already. The narratives will always be there. People are always going to attach narratives to the technical analysis. Wow, look at the sky. My gosh. I decided to record this on the right day. Look at this, man. This is beautiful. Anyways, so the technical analysis is black and white. So just like the S&P 500, Bitcoin is testing a major support level. After 6 green daily candles, the bulls are saying that this is no big deal. Well, here's the thing, Snipers. It will be a big deal if we break below the major support at 19,798. That's the 2018 previous all-time high. That would be the 3rd time that we'd be coming down below this level. That spells trouble, because if we break 19,798, regardless of what the bulls are saying, it opens up the door to 17,204, which is Bitcoin's major support level right now. I don't expect Bitcoin to see any further downside below 17,204 as long as the S&P 500 does not form new yearly lows. But no matter what the S&P 500 does, 17,204 is on the table for Bitcoin. Nothing below that at this point. But if the S&P 500 does form new yearly lows, of course, we'll talk about more downside targets. But right now, if 19,798 does not hold, and it's really a shot in the dark at this point whether this is going to hold or not. If it doesn't hold, it opens up the door to 17,204. If it does hold, then remember we talked about yesterday, Snipers. Price action inside of this range could still be considered bullish. If it's above 20,000 and below 24,300, that's totally fine. That's the range that we're in. But if we break 19,798, it opens up the door to more downside. So right now, the major resistance, of course, is where the 20-week moving average is showing confluence with the major volume resistance at 24,300. We're not going to talk about that right now, obviously, because Bitcoin isn't even close to that just yet. But What we're seeing right now, you can see also a rejection of this previous support as resistance for Bitcoin. This is a major support level that we're currently monitoring. And then the Ethereum merge in less than 24 hours. Remember what we were saying about Ethereum not getting above 1760 validates this head and shoulder bearish pattern. We haven't got above 1760. And so here's what's significant about Ethereum. What's interesting about the price action right now is notice how Bitcoin is down 9.9% as I record this video, but Ethereum is only down 8%, right? Ethereum tends to be the more volatile asset, but the Ethereum to Bitcoin chart's actually up 2% right now. Why is that the case? Probably because the merge is coming up. But that doesn't mean anything, because if you look at the chart here, we're actually so far rejecting this previous weekly open at 78,000, 79,000 Satoshis. We're rejecting the previous weekly open. Unlike the DXY, remember yesterday, snipers, we were looking at the Ethereum to Bitcoin chart correlating with the DXY. The DXY now decorrelated from that. It broke above the previous weekly open with a decisive daily candle, but the Ethereum to Bitcoin chart, it's not doing that. It's actually finding resistance here at the previous weekly open, indicating that maybe we are seeing the buy the hype, sell the news type of price action right now with Ethereum. And so we have to continue to monitor the Ethereum to Bitcoin chart as this merge is coming up here. But Bitcoin dominance, remember, we had a daily candle recently that wiped out 2 weeks of losses for Bitcoin dominance, indicating a potential trend reversal. Now we're seeing Bitcoin dominance pull back. Let's continue to monitor Bitcoin dominance. We could potentially have a trend reversal on our hands here where the Bitcoin dominance could start to move up. And the Bitcoin dominance moving up pretty much means that we're going to start to see a risk-off environment in the cryptocurrency market. Up until now, I think maybe because of the Ethereum merge, we've seen a risk-on environment in the cryptocurrency market. Despite equity markets being risk-off, the cryptocurrency market, within the cryptocurrency market, we've seen risk-on. But that was probably because of Ethereum leading that. That could potentially change now. If Bitcoin dominance truly has a trend reversal, we could potentially see a risk-off environment. And Bitcoin dominance can come up in two different ways. The overall market selling off, and then altcoins see more downside than Bitcoin, causing Bitcoin dominance to come up. Or if we start to see the overall markets move to the upside, Bitcoin will outperform, which we actually recently saw with that move for Bitcoin dominance. It outperformed a lot of altcoins. That's also another way that Bitcoin dominance can move up. So take it with a grain of salt. The Bitcoin dominance doesn't necessarily mean we have to go up or down. There's just certain things that affect it, right? So that's what's significant right now, snipers. You know, the bulls are saying we saw so much upside over the last 6 days. What we're seeing right now is not a big deal, one red daily candle. But the fact is we are taking the elevator down. That is a slight concern, meaning that the bears still have the driver's seat. And so let's continue to monitor the price action, snipers. This is only Tuesday. We have a lot left for this week. A lot can happen with Bitcoin down 10%, testing a major support level, the previous weekly open here at 20,000 US dollars. That is the major support for Bitcoin right now. A break below that would not be good for Bitcoin. And then other than that, let's see if we can get some puzzle pieces from some of the candle symmetry that closed in the equity markets. We'll actually pull up the SPY instead of the E-mini futures contract just to look at it. Well, you can see we gapped down for the SPY. So there's a potential we could be moving up to fill this gap that we actually formed for the S&P 500. So, you know, I don't blame the bulls for saying that this is no big deal, because here's the fact of the matter, snipers. We always say this. The technicals, the charts are black and white. They're programmed to work a certain way. Fibonacci retracements, you can call it whatever you want. Narratives will always be there. So just because a bad CPI report came out doesn't mean it's the end of the world. The fact is CPI peaked in June, and that's when all of these markets bottomed out so far. And the bulls are saying that I don't care what happens over the next few months. You can see the zigzag price action. The fact is we potentially could have bottomed with CPI peaking. And so that narrative is still strong. 6 days of green. If you were bullish yesterday and now you're not bullish, that's pretty foolish. If you were bullish yesterday, you should still be bullish today. As a matter of fact, you should be more bullish today and be thankful for this opportunity, because we saw Bitcoin take the elevator down 10%. That doesn't happen every single day for $1 trillion asset, right? $800 billion asset, whatever you want to call it. So I would say that we're in a transition right now. So You're gonna have to stay tuned, snipers. We'll continue to monitor the charts for you. Just remember this, 20,000 is a very important support level right now. And the S&P 500 and Bitcoin are walking a tightrope on the previous weekly open. That's their major support. If that breaks, it could spell trouble. If it doesn't break, then don't be surprised if we start to move up from here. And so retail sales numbers coming out this week, PPI numbers coming out this week. We have the Ethereum merge this week, and then we have the Fed's FOMC meeting, I think on the 25th, don't quote me on that. So a lot coming up, snipers. Just remember, September historically has been the worst month for equities and the cryptocurrency market ever since the 90s, right? So don't be surprised to see what we're seeing today. Don't get too caught up with these narratives. The technicals are what matter. That's why we have the best four-dimensional technical analysis on the internet, not just covering Bitcoin, but all of the revolving parts that affect Bitcoin, right? Because during times like this in the bull market, everyone's like up and away. But during the bear market, people are like, okay, what's happening with the DXY? What's happening? But we've always been covering this. For the last 5 years, we've been covering these every single day. The four-dimensional revolving parts do matter. And so I think the most interesting thing that I saw today was the DXY and Ethereum to Bitcoin decoupled. And so that tells me that the DXY, with such a bullish daily candle, could potentially move further up into new yearly highs. The Ethereum to Bitcoin chart showing weakness because it was first correlated to the DXY, but now it decorrelated. That's why I said it was in the immediate short term. It wasn't a long-term correlation, but it was an immediate short term. The fact that we saw the Ethereum to Bitcoin chart today show some weakness and actually resist at that previous weekly open, unlike the DXY, tells me that maybe we are seeing the buy the hype, sell the news type of event for the Ethereum chart. And so that's the most interesting thing that I found today. And other than that, snipers, with Bitcoin, I told you guys, as long as we're above 20,000, we could range and pull back to 20,000. As long as we stay above 20,000 and below 24,300, we're still in the same range. Nothing's changed. And so they're just attaching narratives and making it dramatic, right? That's really what they're doing right now. Unless we break below 20,000, now things get a little bit more serious. S&P 500, same thing, holding above the previous weekly open. Remember, 4,000 E-mini futures contract, or I guess it's 400 for the SPY. That's the big level. That's the 20-week moving average. As long as we're ranging above or around that area, nothing's really changed so far. So I'd love to hear your thoughts in the comments below, sniper. Smash like one for the YouTube algorithm if you support these updates. And it's gonna be an interesting week. Stay tuned because we have a lot to cover this week, but certainly in a transition. I think that this is a very premature move. And so those were the things that I found important on the charts today. I'd love to hear what you guys thought was important on the charts today. And yeah, $69 billion wiped out of the cryptocurrency market, over $1 trillion wiped out in the equity markets. It's gonna be interesting to see what happens next, snipers. Until next time, I'll see you guys later. Snipers out.